Hi everyone, thank you for jumping on this Q&A today. So we've got about 36 of you so far have joined. I'll just give it a minute or so to let a few more people come in, because I know it was very popular, this one. So today, just as a little introduction, we're going to be doing a little bit of a chat around the last Bank of England base rate meeting, which happened last week. And then what I'll do is I'll open it up to questions. Okay, and I will try and get through as many questions as I possibly can. We do generally find on these that there are so many questions we can't get through them all, but we'll get through as many as we possibly can. If you've joined the meeting through Zoom, there is a Q&A section at the bottom of your screen where you can input a question there, and I'll pick that up in a short while. Okay, so it's just at the bottom of your screen there. Feel free anytime throughout the presentation or the Q&A today, do feel free to pop in a question there. Okay, so as I say, just give it a minute or so. We've got about 40 people in there. I think we're expecting a few more now. Okay, so we'll probably kick off now then. So just a little introduction to who we are at GetGround. So GetGround are here to be your all-in-one UK property investment platform. Okay, so GetGround has dealt with over £1.2 billion of transacted UK property. We've got over 20,000 customers, and we've got a database of over 80,000 property investors. We're very much all about our partners and using partners to help us offer the best possible products and services to our clients. So we do work with a network of over 1,400 partners, including lenders, mortgage brokers, property agents, accountants, and tax specialists. And we have offices in the UK, Hong Kong, and Singapore. We have got an amazing Trustpilot record, and you can go onto Trustpilot to see all of our fantastic reviews on there. And we are a recognised supplier of the NRLA, which is the National Residential Landlords Association. So what we do here at GetGround, as I said, we're an all-in-one platform. That's what we intend to do here at GetGround. So the business very much started off as a GetGround company. So GetGround company offers a platform where you can set up a limited company to run buy-to-let property through. Okay, and for a subscription fee, you can get access to this platform that has a business account linked to it, so you can see all your rent coming in and your mortgage payments going out, and all your property expenses can come out of there as well. It's got dedicated help for all your accounting needs. Okay, so when you need to do your tax returns and bits and pieces like that. So that's GetGround company. We also have GetGround Search. So GetGround Search is effectively a marketplace for sourcing property for your next property investment. So when you go online, you'll be able to see different properties that are available for sale through the GetGround platform. It'll give you an idea of what your rental yields on that will look like. It will give you an idea of, just a general overview of each property. And it should give you, it's kind of the only platform really like it where it's dedicated specifically towards those that are buying for rental purposes. Okay. And then finally, right in the middle there, we've got GetGround Mortgage. So GetGround Mortgage is quite a new proposition. I myself have been in mortgages for many years now. GetGround fairly new to it. What we're looking to do is really sort of complete the whole all-in-one proposition there by giving you options to finance your buy-to-let investment. Okay, so we currently work with 5 different lenders, and those lenders are able to help clients both in the UK and clients overseas. Okay, we've got interest-only options, capital repayment options, fixed products, tracker products, kind of everything else that you'd expect from your buy-to-let mortgage products. What I will specify though at this stage as well is that we do not give any advice. Okay, so we work on a non-advised basis for mortgages. So do factor that in. There will be a few questions I'm sure that come up in the Q&A that will be bordering on mortgage advice. I may have to steer you in another direction if it is too close to giving advice. But yeah, so that's kind of what we offer here at GetGround. So today's topic, I'm not going to talk for too long today about this particular subject, because I do want to hear all of the questions that you've got for us. We're going to have a very brief discussion around the Bank of England and what happened in last week's meeting. So as you can see from the topic there, the Bank of England have halted the upward trend of interest rate rises. But what does it mean for mortgages? Okay. So some headline stats. So the Bank of England base rate has had no change this month, which is really kind of welcome news, especially for those with mortgages. So still at 5.25. There were 14 rises in a row previous to this. So what's that? The last probably 2 years worth of interest rate meetings have seen a rise. So it's actually stopped finally. Now, the next meeting is on the 2nd of November, and obviously only time will tell what the outcome of that one is. But certainly there were very, very mixed feelings going into last week's meeting. A few analysts had said that they think that due to the inflation rate dropping at the desired sort of rate, that the base rate wouldn't move, but there were a lot of people speculating that it could be a 0.25% or 0.5% still. So it's really, really good news for mortgage clients and for landlords in general, really. So what does this mean? So pricing for mortgages is likely to drop or stay the same until the next meeting. Okay, so we shouldn't really be seeing any lenders putting their rates up off the back of this news, unless some other information comes out, which would sort of mean that they think that the base rate will go up at the next meeting. But largely, we should see lenders sort of stay put as where they are. We may even see a few lenders drop their rates. Okay, so some lenders may well see this sort of as a turning of the tides, which means that the actual rates that they're willing to offer, when they have a long-term outlook on rates, maybe a little bit lower. We have seen a couple of lenders drop already, which is good news. Inflation is moving in the right direction. An ongoing reduction in inflation will see the base rate drop further over time. However, if inflation does start going the other way, we may see another increase. If you look back over the last sort of 2 or 3 months, inflation has been steadily declining. It's sort of around the sort of mid to late 6% at the moment. Obviously, the government are aiming to get this to their sort of ideal range of around 2%. And that's when we'll see rates hopefully normalise a little bit as well. So still quite a little way off the pace in terms of where the government wants to get the inflation figure, but definitely moving in the right direction. And as always, the value provided by offsetting high costs through limited company structures is even more important than ever. Okay, so if you've been a landlord for a little while, you would have been used to rates probably in the 2, 3, 4%. Now you're probably looking at 5, 6, maybe even 7% on your mortgage, and having the ability to offset that cost as an expense is really, really valuable. As we know in personal names, if you're running it through as a sole trader, you don't have this option to offset your mortgage payments for tax purposes anymore. So it is really, it really does show the benefit of having a limited company. So that's all I have to say on the Bank of England base rate at the moment. Obviously, as I said, time will tell what will happen in that November meeting, but fingers crossed it will stay the same and it won't go up any further. As I said at the beginning, I'll say it again now. If you've joined us on Zoom today, you will have a Q&A section at the bottom of the page, or the bottom of the window, where you can add in your questions. I can see a few of you have already asked questions there. And if you've joined via any of our other platforms, do feel free to pop a question in and we will try and go through as many questions as we can today, okay? So first question we've got there is, do you know if Sharia compliant Islamic halal mortgages are available? So Islamic mortgages, Sharia compliant mortgages, they are currently not available through GetGround, okay? As I said, we do work with quite a restricted panel. We work with 5 different lenders, okay? Unfortunately, none of those are offering Sharia compliant mortgages as of present. Tarek has asked, can you please repeat the part you mentioned around the benefit of a limited company for borrowing? Yeah, so absolutely. So as it stands at the moment in the UK, if you buy it in a personal name, as opposed to a limited company name, you are limited on what you can offset as an expense, okay? Whereas through a limited company, you're permitted to offset multiple different property expenses off of your profit, which can mean it's more advantageous for tax purposes. I would obviously say get some advice from an accountant on that. But particularly in regards to mortgages, you can offset your mortgage interest for tax purposes, which means that say your rent is £1,000 and your mortgage payment is 500, you would only be paying tax on the profit for the 500 as opposed to the full £1,000 for the rent. Obviously, there are other taxes that you need to take into account. For example, if you're going to be pulling the money out of the limited company, things like dividends, taking a salary from the company, things like that. So I would seek tax advice, but the amount of availability there to offset is definitely more cost effective in a limited company, obviously depending on your scenario. So Pavan has asked, do we charge a fee? So we do charge a fee for arranging a mortgage. For clients in the UK, we charge a fee of £349, and for clients outside the UK, we charge a fee of £799. Okay, and we usually split the fee into 2 sections. So we'll charge a portion of the fee once you've got your mortgage offer. So that is once you've got a binding mortgage offer from the lender. We charge the remainder of the fee on completion. Okay, so if for any reason you didn't receive a mortgage offer, if your application was declined or valuation came back and you weren't happy with it, then obviously there would be no fee to pay. Okay. Somebody else has asked, which are the 5 lenders that we currently work with? So we work with Oak North, Octopus, Raw Capital, Skipton International, and Molo. Okay. Jennifer has asked, do UK mortgages have setup costs? All mortgages have some setup costs attached. So as I've mentioned, the UK broker fee or arrangement fee that we charge is 349. Other fees that you kind of need to factor in is the product fee from the lender. So the lenders are likely to charge you a product fee for having a mortgage with them. This can usually be anywhere between 1% and 7%. We have seen in recent times actually that the product fees have gone up quite a lot with some lenders. And it's mainly due to the regulations around the stress tests that the lenders have to impose when taking on new mortgages. But I would say the average is sort of around 2 to 4% product fee. You've also got your things like your valuation fees, which often differ depending on the cost of the property. Most likely to see something in the region of sort of £200 to £500 for a basic valuation. You've got your legal costs as well, and often is the case where you need 2 lots of representation, one for the lender and one for yourself. Okay, so expect to pay a little bit there, and obviously any stamp duty costs that may be applicable as well. Just trying to think if there's any other fees. I think that would probably cover most of the fees. But obviously with any mortgage application, you'll be aware of all the fees up front when you get your mortgage sort of term sheets. Okay, so William has asked, is it much harder and more expensive to get a mortgage through a limited company? It's ever so slightly more expensive, okay? So you do find that generally speaking, you're looking at probably around a 0.5% increase on top of what you would normally pay in a personal name. But obviously you do have that benefit to offset more of the costs. So actually, if you put them sort of side by side, although the interest rate is a little bit higher, you may end up being better off in the long run. We find that generally speaking, most of the clients we deal with have done those calculations and they do find it more cost effective. But I must stress it's case by case basis, so it is worth checking. In regards to, is it any harder? Actually, it's probably slightly easier. So obviously you need to set the limited company up, which we're on hand to help with. But actually the stress test, especially if you're a higher rate taxpayer in the UK, is actually far more generous on a limited company. Obviously, if you're a standard rate taxpayer in the UK, it's fairly similar, to be completely honest with you, in terms of difficulty to getting a mortgage. Josh has popped in here. Can international account holders obtain mortgages with Skipton International? Yep, they can. Yep. I've been told that Skipton require a UK high street bank account. Skipton actually don't require a high street bank account. They require a UK account that accepts direct debits. Okay, that's the main thing with them. They must accept direct debits, and they do have a rule in place that actually, if the bank account isn't with like a main high street bank, they can accept usually either a statement or an email from the bank confirming the account holders. Okay, so it's not a hard and fast rule that it needs to be a UK high street bank. It needs to be a UK based account that accepts direct debits. So somebody anonymous here has put, our first time buy-to-let buyers resign to 25% plus deposit mortgages only. To be honest, most buy-to-lets are 25% plus. There are a few lenders that offer 20% deposit mortgages on buy-to-lets, but actually we find that the vast majority of lenders start at 25%. And to be honest, to get the best possible rates, the more deposit you put down, the better rate you're gonna get there. Okay, so we've got another question here. Is there a limit to the number of buy-to-let mortgages you can have? No limit at all. So once you get past 4 buy-to-lets, with mortgages at least, you become what's classed as a portfolio landlord. What this means is the lender will do some additional stress tests in the background on the rest of the portfolio, as well as the one that you're trying to get the mortgage on. But to be honest, that's not usually an issue. Once you get over and above sort of 10, you may find the amount of lenders that you can use drops, because some of them do have limits on how many buy-to-lets they'll take for one particular client or company. But yeah, good question there. Very much depends on how many of them are mortgaged, and if you want a choice of masses and masses of lenders, as the more buy-to-lets you get, the less choice that you'll have. Somebody's asked here, what are the expected interest rates on mortgages if the inflation kept on going down on the same pace for the next 6 months? Hard to say, really, to be honest, actually pretty much impossible to say on that one. Inflation is going down at a good rate, but we've not actually seen the Bank of England base rate drop yet. We've seen it stay put, we've not actually seen it drop. So if you look back to sort of many years ago, probably like 2000, 2008, 2009, I know obviously different circumstances because of the crash then, the rates dropped very suddenly. Unknown what's going to happen with the rates, whether or not they're going to sort of really, whether they're going to stay put for a long period of time and plummet, or if they're going to come down steadily. I would say, to be honest, for the next 6 months, I can't see much difference there, purely on the basis that we've got a base rate meeting where the interest rate is assessed usually every 6 weeks. And over the next 6 months, that means there's only what, like 4 meetings. So I can't see it changing massively during that short period of time. But certainly we've seen with the longer term fixed products, say your 5-year deals, some lenders have dropped their rates a bit in those areas. Okay, so Daniel has asked, do you know if there's any fee-free or at least low-fee packages, or are they all north of £4,000, as I've heard from competitors? Daniel, I imagine that you're probably, and I don't know this for sure, but you're probably looking at a loan size of maybe 200k or thereabouts, which would mean 4% would be a 2% fee, which would be about the norm, to be honest, at the moment. You may get some lenders out there offering a no-fee product, but the rate is likely much higher. And what that means is you're less likely to pass the rental stress test. Okay, so by all means, if you did want to book in to have a chat with us, do feel free to go onto our website to book an appointment. We'd be more than happy to go through your options. But certainly all of the deals that we're looking at the moment have got a fee attached, and most of them are around the 2% mark. So we've got another one here. So, hi, I'm 56. I'd like to know if I'm eligible for a mortgage. If not, can I apply in a joint name with my 29-year-old son? What term of repayment would I get? Good question. We get this question actually a lot in regards to sort of maximum age. With some lenders, depending on where you're based, there's no age limit. So there are lenders out there that we have on panel that we use that has no maximum age. And we have other lenders out there where their maximum age is like 85 years of age. So, you know, and most of these lenders will allow you to have a mortgage term of anywhere between 5 and 35 years. And they give you the option of capital repayment or interest only. So 56, to be honest with you, you can have no problem there from an age perspective in getting a mortgage at all. Okay. And Martin has asked, GetGround a good fit for properties that need renovations before rental? Very much depends, Martin, on how long you anticipate the renovation is going to take. If it's sort of cosmetic stuff and it's going to be done within a couple of months, by all means, I would say we can potentially look at mortgage options for you. If it's a more in-depth build, I would suggest maybe looking at a whole of market broker that can offer either bridging finance or development finance. That's very much going to depend on the build that you're doing. Also depends as well on whether or not the property is habitable when you buy it. And what most lenders describe habitable as is obviously no signs of any sort of damp, things like that. And obviously a working kitchen, working bathroom. Okay, so providing it's habitable and it's just a sort of a cosmetic refurb, then I think you'll be okay. Anything more in depth, probably best going down the route of a development or bridging finance. Okay, so what rate can you achieve for HMOs in limited companies at the moment? And is it better to wait? So in terms of rates at the moment for HMOs, you're probably looking in the region of about 6.5 to 7%, depending on a multitude of factors, you know, loan to value, whether or not it's fixed, variable, things like that. But I'd say conservatively saying about 6.5, 7. Is it better to wait? Very much depends. We get a lot of people saying they're going to wait for rates to go down. That's absolutely fine. We get a lot of people saying that they want to go ahead right away, and the reason for that is that actually with the rates being quite high, you can often negotiate quite a good discount off the property price. So if you look back sort of a year to 2 years ago, most properties were going at asking price or close to, sometimes even going for over asking price. At the moment, we're seeing a lot of clients actually managing to negotiate, you know, 5 or even 10% off the property value, which means that actually even with the high rates, you make that money back by negotiating a good deal on the property in the first place. So I would say if you see a property you like, have a little negotiate with the agent or the seller, see what you can actually really get the property for, and then work out the figures off the back of that. Okay, so Ben has asked, do you only specialize in residential buy-to-let, or do you offer commercial mortgages as well? As it stands at the moment, Ben, we're only offering limited company buy-to-let mortgages. Okay, as I said at the beginning, though, the mortgage proposition with GetGround is fairly new. And actually, if we do see demand in other areas, we may well decide to branch into them. So watch this space. So somebody has said here, if I'm unhappy with my current broker offers and the valuation is low compared to what I have, in that case, can I come to you guys to replace my current broker? By all means, if you did want to receive a consultation with us to see what we could potentially offer, do feel free to book in. Be more than happy to have a look for you. If a valuation has been done by an independent valuer and it's come back lower than what you anticipated, must make you aware that it's very likely that even if we sent the mortgage, even if we sent the application to another lender and it had another independent valuation, it's likely to come back similar. Reason being is that those valuers, they will look at comparables in the market. They're going to look at stuff that's sold fairly recently. They're going to look at stuff that's close to your property, and they do generally all sort of sing off the same hymn sheet, really, in regards to value in the properties. So it may well be that you end up paying for another valuation, may come back very similar or the same. Okay, but do feel free to book in. We can have a chat through your situation. So Josh, really good question. Does the place you buy in the UK depend on whether you're planning to rent it out short or long term? Really good question, because we're getting a lot of demand for sort of short term lets at the moment, just because the yield is that much better. It does depend. So where you buy can factor into that, but not always. So for example, we're seeing quite a lot of people buying sort of Birmingham, Manchester, buying sort of 1 or 2 bedroom flats. They are great for long-term lets, because you get sort of young professionals that want to rent in those areas. They're also really good for short-term lets, because you get people going there for, say, a long weekend. You know, so those type of properties you've got real flexibility with. Key thing to remember is you must tell the lender when you're getting a mortgage how you intend to rent that property out. Okay, because it will depend. You know, some lenders will take short-term let, other lenders won't. In regards to properties that will be more restricted, is things like if you buy down like by the coast, okay, will be really, really good for sort of Airbnb and that type of thing, but you may not get somebody who wants to live there for a long period of time. So I would say really have a look at, there's 2 things you can do. You can look at the sort of average rents in the area by, you know, going online and having a look at properties for rent in that area. That will give you a good indication of what the long-term rents will look like, and also how many properties there are to choose from in that kind of price range. If you see that there's absolutely loads of properties available and the rents seem quite low, then you may struggle to rent that property out on a long-term basis. Also compare that to like going on Airbnb. Okay, if you go on Airbnb and you put a postcode in, search within sort of half a mile of that and see exactly what's available and how much they're booked up. So if you go in as if you were going to book a week away or something for yourself, you'll be able to see what the kind of demand is for similar properties in the area. Okay, somebody's put in there, what are the current time spans for getting an offer and getting things sorted? So current time span at the moment to get an offer is, I mean, it is very much case by case basis, because all of our lenders work on different sort of timescales, but we're looking, I'd say, on average about sort of 2 to 4 weeks to get an offer at the moment. And in terms of getting everything completed, a lot of that comes down to how fast your solicitors can act. Okay, is it possible to get buy-to-let mortgages through a UK limited company if 2 of the 4 directors live overseas in the UAE? Yep, we do mortgages for clients in the UAE all the time. It's probably one of the most accepted areas from lenders. So yeah, no issue there at all. Obviously, because 2 of the 4 directors are living overseas, you will be subject to overseas rates. Okay, it's not going to be UK rates, and do be aware that mortgages for clients overseas are a little bit more expensive. Okay, somebody's putting here, how long does your mortgage in principle last for? Very much depends on the lender. Okay, mortgages in principles can last anywhere from 5 days to 90 days, depending on the lender. What I would question with that is why exactly you feel you need a decision in principle. Often is the case at the moment that actually for buy-to-lets, especially limited company ones, it really just is a question of whether or not the rent fits. We can do that calculation for you really quickly without you having to go through the rigmarole of a mortgage in principle. The only time I'd actually recommend that you need a mortgage in principle, well, 2 reasons. One, if the estate agent needs it to put your offer forward. And the other one is if you've got any credit issues in the background, whereby you actually need to do a credit check. Otherwise, it is just a real simple equation of does the rent fit for that loan amount? And that's going to be based on the rate at the time of the application. A mortgage in principle actually wouldn't honour that later down the line, because a mortgage in principle doesn't often actually reserve the rate. It just tells you that the rent fits, to be completely honest. Okay, so Sammy has asked, is it possible to get a mortgage for a retired person without a pension? What are the requirements to get the mortgage? Yeah, so if you're retired without a pension, if you've got no form of income at all at present, you may struggle a little bit, because most lenders want some minimum income in the background. There are a couple of lenders out there that I'm aware of that will be able to offer you a mortgage, providing the rent is very, very strong and providing the credit history is good. If there's other bits of income that you do receive, that can all go towards a minimum income requirement. Most lenders will ask for a minimum income of around 25k. There are a few lenders out there that have a minimum income requirement of around 50k. So it does vary. I would say if it's something you're looking to move on in the next sort of 3 to 6 months, do book an appointment in. Be happy to chat it through with you. So Alex has asked, is there any restrictions when it comes to a non-UK resident getting a mortgage via a buy-to-let company? No, so the main thing, Alex, is whether or not the lender is comfortable to lend to clients in the jurisdiction that you're in. Okay, so with all of the countries, there are sort of risk profiles associated. Okay, if you live in a country that is particularly high risk, you know, if there's an area that may have been, I don't know, recently involved in a war, or if there's if the banking system out there is less developed than other countries, you may well find it harder to receive a mortgage. The other thing as well is it depends on the currency in that jurisdiction. So for example, if you live in a jurisdiction where the currency can fluctuate quite dramatically, you may struggle a little bit more as well. However, if it's something like euro, dollars, dirham, generally they're really widely accepted. You're not going to have masses of restrictions, providing that the country is on the accepted list. However, you will obviously have less choice of lenders, okay, because you're a non-UK resident, okay? Okay, so somebody's asked there, what can you include in your mortgage? For example, solicitors' fees, furniture tax, stamp duty, etc. If you're looking to do a purchase, because presumably you mentioned stamp duty there, so I assume you are looking to do a purchase, you're going to need a minimum of 25% deposit, okay? So that's 25% as well of the property purchase price. So if you planned on putting, say, 35% down, but actually you realise you need to pay for those other fees, you might want to rein that in a little bit and do 25% deposit. And then you can use that 10% that you've not put towards your deposit for all of your costs, but it's usually a minimum of 25% deposit. Alex has asked, what income tax band does one need to be in for the mortgage stress test to be any easier when applying for a mortgage? Really good question, Alex. So the way that it works is the lender will assess the rental against the mortgage payment. Okay, and the rental will usually need to cover the mortgage payment by 125% if it's in a limited company name, regardless of whether the director is a lower or higher rate taxpayer. When it comes to personal name mortgages, if you're a lower rate taxpayer, the rent will need to cover the mortgage by 125%, same as a limited company. But if you're a higher rate taxpayer, it's likely that it will need to cover the mortgage by 145%, which means it's that bit harder to get a mortgage, or the stress test is that much harsher. Now, obviously, when I say the mortgage payment is usually based on an interest-only figure, and it's usually at the pay rate that you're going to be paying, or the pay rate plus a certain amount, like 1 or 2%. Okay, so I hope that makes sense, Alex. Ben has asked, how long can you get fixed rate for a limited company? Is it the same as a personal mortgage, or is there more choice? Limited company mortgages is actually slightly less choice. Reason being is simply that it's classed as a more specialist product. But in terms of buy-to-lets, the general rule of thumb is pretty much all buy-to-lets are either 2, 3 or 5 year deals. There are some odd ones in the market that are 7 or 10 year deals, but where there's no competition really in that space, you will find that you pay quite a lot more for those products. Monica has said that she would not feel comfortable using bank statements as proof of address. Depending on the lender, you may be able to look at other proofs of address other than bank statements. Do be aware though that many lenders will ask for bank statements as part of the underwriting process. Right, so AO has asked, can you get equity out of your home mortgage to buy to-let properties? Yes, you can. Yeah. So we don't currently offer any residential mortgages, so mortgages against properties you live in. We only offer limited company buy-to-let mortgages. However, if you either went to your existing lender or you went to a whole of market broker, they could provide you with advice around pulling money out of your existing property to put down as a deposit on a buy-to-let mortgage. Okay. If you do find yourself in that situation, you've got your deposit ready from your remortgage of your main home, then do get in touch with us. We'll be happy to look at the mortgage options for you on the new buy-to-let. Somebody's asked, how quick to GetGround help with mortgages? We can usually try and help you as fast as we possibly can. Okay, so we book in usually anywhere up to a week in advance into the diary. Okay, because we have quite a lot of demand for our mortgage products. In terms of actual turnaround times, you're looking at around 2 to 4 weeks on a mortgage offer at the moment. Okay. Okay, how difficult is it to find a buy-to-let mortgage if you're a first-time buyer and you don't already own residential property? Really good question, that one. You will find that most lenders will have a minimum income requirement that you need to meet. Okay. They will also do certain checks in the background to make sure that they don't think you're going to be living in the property. Okay, what they don't want to do is give you a buy-to-let mortgage on a property and then you end up living there because you know it's easier for you, or you know, some people unfortunately do plan to do that from the off. So really, it's the plausibility of if you're going to be renting the property out. You know, for example, if you're renting a 1-bedroom flat yourself and you go and buy a 1-bedroom flat next door to rent out, they're probably going to think that you're trying to buy that to sneakily live in yourself. But certainly, you know, if you've got a sort of a good idea of what you want to buy, and you've got a deposit together already, you know, you're going to need sort of 25% plus, do get in touch. We can get you booked in to go through some options with you. Had another one here asking whether or not you can take money out of a private home mortgage for other buy-to-lets. Answer on that is yes. You will need to speak to an independent mortgage broker on that one. Somebody's asked there, how easy is it to change from a personal mortgage to sell my limited company and then apply for a limited company mortgage? I think what you're asking there is moving a property from personal name into limited company name. So effectively what you would be doing there is selling the property from yourself to a new entity, which will be the limited company in which you're the director. It's fairly easy to do from a mortgage point of view. It is just classed as a purchase application. Where it does become quite tricky and it can be quite expensive is from either a legal and a tax point of view. So what I would say is that do get some quotes from solicitors as to how much that's going to cost you, whether or not there's any stamp duty liable, things like that, because a lot of people are put off by the cost involved with it. In terms of the actual ease to set the mortgage up, it's fairly straightforward. We've done a few of these. It's just a case of making sure that the sort of the taxes and things like that will stack up for you. Sam has asked, for some buy-to-let mortgages, proof of personal income is necessary for the mortgage applicant. Yeah, so we do often like to see proof of an income. Usually this is 25k plus. It's not a hard and fast rule, though there are deals out there if you do have less income. I'll answer one more and then we'll call that a day. So we've got one here. Does GetGround invest in BRRR properties in the Northeast? So I think what you mean here is where people buy a property, renovate it, and then effectively refinance it and then rent it out. You can potentially look at doing this. What you will find, though, is if you need a mortgage on that, that's where you're going to struggle a little bit, depending on how much of a refurb you're looking to do. Okay, so as I mentioned earlier, if it's a big refurb on there, you're probably going to need some kind of specialist bridging or development finance as opposed to a standard mortgage. Hopefully that helps you there. Now we've gone through about, I think, 38, 39 questions now. Do have to call it a day there, but thank you all very much for joining. If you did want to get booked in the diary, you can go through our website to get booked in, and we will be running another one of these Q&As probably in the next few weeks, so do keep an eye out if you want to join another one of these Q&As. Thank you very much.